jump right in. All right. Welcome, everyone, to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host, Trip. We got an awesome episode for you guys planned today, but before we get started, with all of our incredible subscribers, do me a favor, smash that like button, make us look good for the YouTube algo. Before we jump in, I want to take a quick second to thank our sponsor, Phemex, one of the only non-KYC derivatives exchanges left in crypto. So click the link in the description below to get up to $6,000 in sign-up bonus. Now, the last thing I'll say before we get started here, that nothing we say on the Tools of the Trade live stream is meant to be considered financial advice. We are not financial advisors, and this information is for educational purposes only. All right, so now that I'm done chilling, Trip, how you doing, my man?
I'm good. It's good to be back for another episode. Got a big day tomorrow. I feel like this is a culmination of events people have been waiting for to figure out, is the dollar going to break out or break down? Things have been trading in like a 125 basis point range for 20 days, and it's been the main focus of everyone. So yeah, I think we'll hopefully get some resolution around direction tomorrow from good old Jerome.
Yeah, it should be good, right? FOMC, right? That's kind of the volatility day that all traders wake up early for, sit at their desks, kind of map out their plan, and then everyone has a game plan until they get punched in the face and price goes one way when they're looking for the other. So yeah, it should be a good day of volatility. How are you thinking? I guess let's just jump right in right here. How are you thinking of positioning in terms of based on what Jerome might say or what the hike might end up being?
Well, I mean, if you just go back and historically look at price action around FOMC, you get our favorite Darth Maul candle, right? So
Absolutely.
people have strategies on how to trade those things. I mean, I'm eyeing liquidity pockets on Bitcoin in particular. You know, what is he going to say? To be honest, I don't really know. I don't have an opinion, like too strong of an opinion on like what he's going to come out and say. I think it's going to be 25 basis points. I don't think like they're going to pause or, you know, even talk about that at this point in time. I still think they're very data dependent. They're going to need to see a lot of things flow through the economy more. I mean, we saw Australia raise 25 basis points today. You saw the Fed funds future rate go up in anticipation of that. The JOLTS jobs numbers were a little light relative to expectations. So, you know, there's a lot of variables that kind of everyone's looking at. I don't think he's going to push too hard in either direction. It's kind of like stay the course, higher for longer. But again, the market always surprises us. In terms of like the chart itself, I think is a bit more telling about where price might be able to go and why.
Let's take a look at that.
Which is something that we've kind of been talking about like all day.
Yep.
Yeah, I mean, like if you look at the way risk traded today, the dollar initially, and then how
you're on Bitcoin, by the way. Show us DXY or
yeah, I'm just talking in general. So like this correlation trade, like it's just like there's no rhyme or reason why these things are going up or down, right? Is it largely because regional bank run, you know, that whole narrative is back on the front burner? I think so. Like that's just like an easy way to push price around. But even if you didn't know anything about the news, you could have just looked at the price this morning and said, you know, we had talked about 28K being the 50-day moving average on Bitcoin.
Yep.
I'll pull that up so you guys can see that. And then, you know, there was like literally liquidity all over. Let me just put the at 28K, right? I think we did 27.7.
27.7 was the liquidity pocket.
Yeah, there was a pivot there. And so, you know, we all like having top shorts and I think this market has been a huge lesson in exercising patience, right? If you're short from like up here and you see this come back here, you know, it's like set and forget. Your stop is up here. You just have to kind of let the market do its thing in this kind of distribution zone, if you want to call it that. But there was 11 billion in shorts this morning on Bitcoin. Like, yes, we've pushed 19, 20 in the past as like big reversal points, but going into FOMC tomorrow, like heavily short, you know, the day before, is it like, can they clear out a bunch of shorts and get people long? Like, Yeah, I think that's kind of like,
That's the recipe. That's the playbook, isn't it?
yeah. So like, I'm flat right now because, as I said, I don't really have like a particular direction where I think the market's going to go. I do think this holding the 50-day moving average is really interesting. And then if we go over to Hyblock, and I'll share this over here. Can you guys see this?
Yep.
So like if you just take a simple approach and say there's 15 short licks to 0 longs, right? Like this liquidity to me is going
Untapped.
tapped one way or the other. We'll put it on the most granular. And look, like this was this morning, right? Where was it? I guess 8.7 billion, because this is a look back. All right, yeah. So now there's 3.5 billion in shorts. I mean, it's not as favorable, but like this squeeze was like kind of setting up in my mind when we tapped this liquidity pocket. And so you're now looking at like, is this going to 29.1? Is it going to go to 29.2? Because like, look, this is resistance, right? Or are you going to really squeeze up here to 29.5? We had talked about this. What would that be, running the weekly open?
Basically, yeah. Weekly open, Monday high. Right,
yeah, this area,
untouched since as of 24 hours ago.
Right. So 28.665 we're sitting at right now. I don't know. I still think this is going to squeeze higher. I think a lot of people wanted to short here and put their stop here, and now we've basically taken that and we're like kind of consolidating like in this area.
Looks like an SR flip, basically. Like that was resistance. Now we're consolidating above, preparing for one more leg higher and see where that takes us.
Right. And so if we look at, I'll share this. If we look at like a 4-hour chart on Bitcoin, I'll turn off the 50 MA. I only really use the moving averages on the daily, just as a sense of the trend. I don't typically. I know there's EMA strategies people use, and they're super successful with it. But
shout out Pierre.
Yeah, and they're good at it. But like this is 30.3 up here. This is a pivot.
Yep.
Like it's either going to stop like in this zone or it's going to go here. And then if it's here, like it seems like it's just going to run the highs, right?
Yep.
You could have also said that about this right here on that move. Like it looked like it was going to run the highs. So I'm going to be looking at 29.12 area, like the reaction there. And the reason is because something I've been using a lot more recently is this liquidation heat map for BTC. So this is going to show us basically the Binance 12-hour. And we can zoom in here and get a clear picture. And the bright yellow, anyone who's been on the stream before, we've kind of explained this, but you can see that this lines up basically, it's like a legend, right? So 0 to 500 million. So these are your biggest clusters of liquidity. And here it's 28,950, right? So basically 29K is where a large cluster of liquidity is resting. And if we looked at the liquidation levels we just looked at and the Bitcoin chart, like that's kind of the area that you're talking about, right?
Yep,
like it could go into this, grab a bunch, trap a lot of longs. One thing that I would look for in particular is the delta to actually flip green. We were just talking about this off stream, and I'll show you back on the liquidation levels, where BTC squeezed here, right, to 29.9 basically.
Yep.
Didn't need to squeeze that many shorts, but it trapped longs, only 2.5 billion.
Yep.
Right. And that was a weekend move, right? I think.
Yeah, it was. Yep,
yeah.
It was Saturday.
Right. So then you get this bleed, right? And now you've trapped the shorts. And so until this like flips green, I wouldn't necessarily look at trying to short anything blindly. I'm going to be watching those key levels to see the reaction around that. Whether it comes like before FOMC, like rate decision, like during the press conference, I'm not entirely sure, but those are the things that I'm concentrating on just from a BTC standpoint, which is obviously going to dictate the rest of the market.
Yep, for sure.
So yeah, that's kind of my high level take on BTC. I'm curious what your thoughts are.
Yeah, just looking at just like a naked chart, I always like to kind of start things out. So, we have the weekly open right here, 29,240 call it, and then the Monday high right above, 29,350. Like this to me is a key area that just hasn't been tested since weekly open basically. It's been a straight downtrend, up, and now it looks like we're kind of consolidating above, like we talked about, like this previous resistance turn support potentially, right? So like I think this to me is like consolidation. We get some of this, maybe a little dip under, but then eventually we're going to go for these highs, right? We're going to try to tap this area and see what's there. Now the interesting thing to me, you mentioned that 29.5 liquidity pocket. So for me, although this was like the weekly open and the weekly high, or the Monday high, sorry, this level to me was actually like that order block that we're looking at, right? So we had a bunch of higher highs and higher lows, and then this was the higher high or higher low we tried to make before we actually broke market structure and broke this low here. So to me, in my mind, from 29.3 to 29.5, that's actually resistance or supply, I should say, where I'd be looking to kind of compound on shorts. So currently I'm still positioned from 30K 1945 on swing shorts. I did hedge on this candle right here at 28,450 and 1832. I'd like to close those hedges somewhere around this Monday high, weekly open, and then potentially add the shorts in this area. Now, of course, we don't know what FOMC is going to look like, what the Fed's going to say exactly, but show me the chart and I'll tell you the news. That's kind of how I'm looking at this. So, these are upside targets, obviously. If we get into this zone, that's where I'm looking to compound. Inversely, right? So this is our Monday low, untapped. And then when we zoom out for a bit, right, we look at kind of the daily structure here, and we've never ran these stops at like 26.5, call it, right? And then we had this 26.9 SFP. So I can also see a scenario on the flip side, right? So for me, it's always, when we think about FOMC and these news-driven events, I like to fade the move regardless of which way it's going, right? So if for whatever reason we start nuking down and we come down below 29.5, 26.9 and 26.5, and we kind of sweep these stops, that to me is almost a long setup, at least for a dead cat bounce back to like the previous range high, somewhere around there. So below 26.9, I might be looking for longs around 26.5. Above 29.3, I'm probably looking to compound on my short position. So that's kind of the high time frame overview of Bitcoin. But when I throw on Ichimoku, which is my favorite trending indicator, we have this untapped Kijun level right here. And this sits at 25.3. So, the Kijun is essentially mean reversion for the trend. If you notice, it's been decently well respected on the way up, besides this little deviation here, which was a 3-day edge setup. And price likes to return to the Kijun. Kijun is really just a dynamic 50% Fibonacci retracement. It's mean reversion in a trending market, and it usually provides good opportunities to get back into the trend if you think the direction is, quote unquote, still up. Now, on the 3-day, the interesting thing here is, we have our 3-day edge to edge setup. So like this was a long setup, and then the target was 31.8, 32K, call it 31.8. So the interesting thing here is now your 3-day Tenkin sits right above that range high at a 25.3. But more importantly, in my mind, is I think it was probably a month ago we discussed this. On the 3-day, this to me is like the clearest demand zone, or SS, like support zone that you want to see flipped in, or the supply zone you want to see flipped into demand, from 24 to 23K. And interestingly enough, your 3-day Kijun now, at least until the middle of May, is going to be sitting at 23.2. So this to me is a high time frame area I'd probably like to bid, and I'm going to be patient for that. But conversely, if we do run that 29.5 area, we don't get a reaction like Trip mentioned with those licks, and we start going to 30.4K, and we start to probably run the highs, it's probably around 32K that I'm looking to probably get out of any positions and probably reshort this area. Just because at that point, your edge to edge is completed. And then, Ichimoku dictates when you complete the edge to edge, you wait for a Kumo twist and you wait for a breakout trade as an SR flip. So that's kind of the high time frame view on BTC. What are the ETH licks looking like, Trip, so we can kind of dive into that?
Yeah, let me see. I haven't actually looked at too much of
because ETH's been super strong recently, actually.
Yeah, you seem to have more of a. Here, I'm pulling them up. More of a finger on the pulse for the ETH BTC pair.
Yeah, I've been trying to. I saw that death candle on that, that 3 inside up reversal we mentioned a couple weeks ago.
Yeah, so ETH, um, I mean, look, it's kind of a similar lead, trap shorts, move up, determine. I mean, you've definitely run. So there's only 346 million in shorts, and you took out off of the 3 billion. So there weren't as many as Bitcoin, but still, like a significant amount has just come off. And if you look at all this, like these are longs. These are like
Yep.
all longs,
Yep.
right? So if this pushes to, let's say, here,
About
1911,
1911. Yep, that's that lick.
like look at this. This is 132 million, right? So sometimes, I've said this a couple of times. Drop the granularity to see, like, this is a big lick right here. Like if price wants to go there, and there's a very good chance then that delta is going to flip green, and we've seen how many longs are there. Maybe that's a place like where you could get a reversal, like
Yep.
where,
That would be the SR flip.
yeah, and it's kind of similar to that same area, 2923, whatever you want to call it, around that weekly open, like structure wise, like this is the, like, tried to go up and then boom, or is it this one? But this seems like the more significant area because you have these wicks right here, and that's like right on a lick. So maybe
Agreed.
it's 1910 to 1920. That's going to probably result in something like this, and then
Trap traders.
bam, yeah, then down. That's what this market's been doing, really. Like, just
Just liquidity games, up and down, up and down.
yeah, and ETH on the chart. Um, yeah, that's 1916. I mean, like, I guess we can actually start pulling fibs because we talked about, like, all right, the 61.8, but a lot of these moves have been pushing to the 70.5 and like 78.6
Yep.
retracement levels. So take that low
78.6 is 1910. That's right on your lick right there.
right there. So that's a pretty crazy, like, risk reward, if you're putting your stop above
Up
here
above
and
the
you're,
high, 1940, whatever. Yep.
yeah, and that's the type of trade where you can, like, literally put it in with the stop loss and just, you're like, all right, this,
Set and forget. Let it
yeah,
play out.
and
Yeah,
I
it's
think,
interesting that you mentioned ETH because I want to take a second before we dive a little further. So yeah, just that weekly open we talked about is actually right here, and then the Monday high is right here. So we're above the weekly open on ETH. The Monday high is at 1886. But again, like we mentioned, this to me was like the real supply before we actually broke market structure. And again, that's about just around 1900. So if we pivot to ETH BTC real quick, this has kind of been the obvious tell is we've seen that the strength in ETH BTC since basically the bottom, right? So here we had a 3 inside up reversal on the daily. This was clear as day, and we saw how we trended up to 2100 around here and then started falling off. And again, we've retraced this entire move, right? So if we go from here to here, throw some fibs on 61878. Yeah, so again, there's your 786 at 634. We just basically tapped it essentially. So the interesting thing here now is, like, when I look at the weekly, this to me is a 3 inside down reversal that we just had. So this to me is almost like a bearish retest on the weekly. ETH has shown strength in the beginning of the week, but I reckon that that's actually going to fall off moving forward. And the reason being is, we've been in the 700-day range for 700 days, or yes, 730 days, something like that. And it really makes sense that at this point, we were in the range high for so long, we went below mid. This was the retest of mid right here. And now we're going to likely trend down to range lows at like 55. Are we going to deviate, come back? I don't know. But range lows seem likely. So in my mind, ETH BTC is going to show weakness. This might be not calling the top of the weekly move, but I don't think it gets above 67. So whether it gets to here or whatever, it's going to trend down towards 55. And that just tells me that ETH BTC is going to show weakness. And then in translation, ETH is probably going to actually be the better short as we approach that 1911 level with those liquidations we just talked about. So I think actually as we get up here, we're going to see BTC dominance kind of jump up. BTC is going to have the move. If we get up to 29.3, maybe ETH gets 19.11. And from here, this bleed is going to probably be much more profitable on ETH than it is on BTC.
yeah, I mean, straight shot up diagonal gets you like 1915 on the daily too.
Yep. Okay, I can see that.
And again, here you are on the 50-day moving average. Like, is it going to hold? I mean, I think the daily Kijun on ETH is what, 1740?
1752, if I'm not mistaken.
1750s,
50.
right?
Yeah. Yep.
Well, like your short setup could essentially be like this
1910.
stop
Stop above
there.
1940. Target 1750.
Yeah.
It's probably a
I don't
nice
know.
risk reward, actually.
Yeah.
Right.
So like these are the things that I'm kind of looking at, preparing myself with like a plan. But yeah, not currently in any positions just because like these tomorrow's it's going to be chaos. Like this, the market, the market makers look forward to just liquidating people on days like that.
The Darth Maul, right? And like we should take a second to talk about that. A lot of people, they always ask like, how do you position into FOMC? If you don't have a bias in the beginning of the week and you haven't traded, it's usually better to stay flat because as traders we get paid to react, not anticipate. So it makes a lot more sense to stay flat, see what the Fed does, see what the chart tells you, and then from there make a not a split second decision, but have your levels marked out like we just talked about those licks at 29.3, 29.5, and then also on ETH at 19.11. If we go up to there first on the move up on FOMC, that's probably a good place to fade. And then conversely, we talked about getting below 26.9, 26.5. That's probably a good area to long. Again, these could be scalps, it could be swing trades, whatever the case may be, whatever your system tells you. But FOMC, a lot of news-driven events, it's always regards around volatility. So, it would behoove you to kind of position yourself or at least create a mental framework for what are you trying to see on the chart? And then when you do see that, how do you plan on reacting? And then at the end of the day, it's just execute, because we get paid to execute in this business, not draw fancy lines and risk reward tools.
Yeah, so I forgot that Binance actually added liquidity for ETH.
In the heat map. Nice.
Yeah, so if we look at the 12-hour, this down here is 1830, so that's the brightest one. But like this is all liquidity here, and you would run it. That's the top of 1900, and then you're getting into 1920. So like this purple right here, you guys can see this is essentially a gap. So how hard it would push, like 1900, go through it. Maybe it stops there, and you get that 1911 lick, or it's going to push up to here. And we can look at a 7-day to see if there's anything more prominent, like in terms of like a cluster. Yeah. Okay. Well, clearly this zone, 1960, 1970. I mean, yeah, if you start running 1945, which is basically where your stop would have been, then you're going to be pushing into these higher zones. So it's kind of like BTC of like 29.2, or is it going to 30.5? And then
that's why it's almost better to stay flat, right? And then kind of react in real time
because
rather than
I've tried to
blindly.
short. Look, the day that Bitcoin went up 3 times 10%, it went up 10%, down 10%, and like up 10% again in less than 48 hours. It ran through like crazy amounts of liquidity. So like reacting around these levels versus just blindly shorting these is much better advice, because I've done that and like been like, oh, I'm long, and then it's just like whew, it runs all the stops, right?
Yep.
And
Yep.
it's a violent game. So I'll be looking at like the areas that we talked about.
I like that. I'm gonna pivot for a sec, Trip. I want to talk about meme coins for a quick second, and for multiple reasons, right? So this is Pepe coin. I think we all know Pepe. Last night, right around here, I said this is probably the complacency shoulder for after a blow off top, right? And the reason I mentioned Pepe at all, I really don't think we're going to make an all-time high, and you guys can quote me on that. I don't think we're above 1500 ever again. But point being is, when I see meme coins exploding, and I guess now there's Wojak and Wall Street Bets coin, like a whole plethora of meme coins that are just sucking liquidity out of the market, while BTC has kind of done basically nothing. It's been a short squeeze this whole way up, and now we saw some buyers step in at the 28.7 level, 28.6 level. But point being is that when you see meme coins explode at the end of a long Bitcoin move without a significant correction, from basically the yearly open of 16,000 to 31,000, almost a 100% move. That to me is like as loud of an indicator as possible that we're nearing the end of the cycle, right? So I've always believed Bitcoin operates on like a 4-year fundamental cycle, and it has little mini micro cycles in between, kind of driven by the halvening rally, and then whatever the current narrative is, right? Like Tripp just mentioned, the whole banks failing narrative that's kind of been propping us up. Now, as we approach what I believe is, the beginning of a steady downtrend to 23K and potentially even the yearly open or lower, when I see Pepe coin on, a billboard in Times Square, and I see, the left curve guys in all the group chats making, multiple X's on their DEX screener shitcoins, that to me is like the end of the rotation. The hot ball of money started in Bitcoin, right? We saw that. And then it rotated into ETH. We saw that. Because look, we had to move on Bitcoin to 31K. Then ETH had this monster move to 2100, and then we saw a lot of the major alts kind of have their strong moves. And then we saw the Four Horsemen, Link, Atom, and a few others having strong moves. And now we're seeing meme coins, right? So this is just how the cycle of money just kind of rotates in between, and it's really just a hot ball of money. There's no new money entering the space right now, guys. Don't confuse it. This is really still a PvP market. The halvening narrative and the quote unquote golden bull run in my mind won't start until end of this year, beginning of next year. So we still have time for lower prices before higher prices or all-time high or whatever you may have you. So the point being, I mentioned all this just to kind of keep yourselves grounded. Can we go higher from here? Absolutely. But if you've made any money trading since the beginning of the year from 1,200 ETH to 2,100 ETH or 16,000 BTC to 31,000 BTC, it would behoove you to start locking in some money and at least be more risk averse or less risk averse, more risk averse just moving forward, because a lot of money has been made and the door to exit is always smaller than the door that it took you to get back in. So just a little side note I want to kind of mention there. What are we thinking, Tripp?
Yeah, I mean, I don't disagree with that. I know my lanes. I don't know how to trade meme coins. But like, look, if you made money doing it, congrats. I didn't really have. I wasn't paying attention there.
That's the thing. When you start paying attention, it's usually too late, right?
Yeah. You need to be really early on that, or the day after, and then when something moves like that significantly in a day, you're like, can't go up anymore. And then I don't know, what did it go up like another couple 100%, maybe more. I have no idea, but yeah, missed it. So whatever. That's just not my forte. So if you look at net short positions, granted this is BitMEX, but another tool of Hyblock, here's where big concentration of them is around 28.8K, right? So this high is probably people shorted, and then this is where they're going to get squeezed, basically. So, and you could see how price moves through these significantly. So that would give you the 29, and we can look at net longs to see. Yeah, right. So
28.6. Yeah, I remember there's a lick there that we swept on this move down, actually.
Yeah. So
top buyers get run, bottom buyers probably don't get touched until later, or they get ran during FOMC, right?
Yeah, 28.1. Yeah, what's your estimate on the Darth Maul?
Yeah, that's interesting, right? So the FOMC Darth Maul, I really, just based on how we traded from 27.4 all the way up to 30K, I really can see $1,000 Darth Maul both directions. Price literally going one way and then immediately reverting the other. So let's just pretend we're at 28.7 tomorrow during FOMC, where our current prices. I can see 29.7 and I can see 26.7 or 27.7, all within the same 1-2 hour period that just absolutely demolishes everyone. And at that point, price just stagnates, right? We go up, we go down, and then we stay in the middle and we keep consolidating for another week. I think that might actually be max pain right there.
Yeah, I was looking at BTC to see where the lower liquidity pockets were. I think 26.9 was maybe one of them. Let's see here. Hold on. This is on the 12 hour. Okay, 27K basically.
Yep.
And then
it would run that low from the dump from 30K basically.
Yeah. So you'd get 26.9. Maybe it goes to 26.5. But like, I could see something savage like that happening tomorrow. They usually run it into the into the press conference. I feel
And then
like
they revert it. They did that last FOMC, didn't they? Where they
yeah,
ran it up to 29K or
27.5.
whatever it was.
Yeah, basically you're going to tag this and you're going to tag some of this tomorrow. I'm like
Yep.
pretty confident that that's going to happen. How low this goes, I don't know. You could get all this down here, and you could get this. So I think 29.7 to like 27.5 is
Yep.
like fair game, and it's like good luck positioning in front of that.
Yeah, I think if you don't have a bias, it's better to just be flat, react, fade the first move, take your profits, fade the second move, take your profits, and then wait for the actual trend to kind of tip its hand. Otherwise, you're really just playing with fire. Especially, if you're positioning in the middle of this range from 30 to 27.4, probably not ideal, and you're going to feel the pressure. And then, as we know, whenever a trader is underwater in a position, it kind of changes your bias and the way you approach markets. So, having a clear head, I think, is even more important than actually being positioned to make a profit. If you haven't had a bias this whole time, because you're much more likely to act in a clear and rational manner when you're looking at naked charts, blankly without a bias, than you are if, we start FOMC, you're in a short from 29K, all of a sudden it's pushing up to 29.3, and you're just going to probably make bad decision-making processes. So I think it's key to just kind of be open-minded, be prepared, react, don't anticipate.
Yeah, I mean, if we look at like the S&P, it's like, okay, like people thought this was the top, comes down, and here we are back up here. Was this just running the high? Like people thought this level is like
Range high, right? Basically.
yeah, but it's been hit a lot. Like
Rule of fives.
one, 2, 3, 4, 5, 6. Right? So I don't know. I still think we can push up to like here, personally. And on the NASDAQ goes 13.7, and then that would likely put Bitcoin and into those higher numbers we talked about.
Yep.
Potentially.
Yeah. What are your thoughts on NASDAQ? I feel like, is it trending? Is it just chopping?
I mean, look,
Thoughts in
here's your
general.
high, here's your low, here's your high. Is this your low? Are you going to
Yeah,
make
it
a
could be
like
another high.
market structure wise? This is bullish,
Yeah, you're right. And it broke from that trend line. That's a good point.
right? Like so, if you just take a step back and you look at like the most simple thing, which is your market
Market
structure of higher
structure.
highs and higher lows, or lower lows and lower highs, like it's not as clear on the S&P, but it's pretty clear on the NASDAQ. And
Yep.
like
And then
if you look
if
at the
that's a tech
earnings,
trade,
if you look at the earnings that have come out, like I think people are a bit surprised that they're not that bad, right? It's like it's good. So you have these macro cross currents in the market, but you also have some like individual stock earnings that are, I think, impressive. And then you have this whole like banking run that's could manifest itself and make everything crash. That's why, like, as a trader, like it's been really hard for me lately just trying to stay in positions, like have
yep.
conviction and stuff, because this market is so schizo up and down that like you kind of just have to like get in a position and turn your screen off.
Yep. Set and
Um,
forget.
yeah. Or you're managing it like very diligently.
24/7.
Yeah. And that's like I had I shorted the top of like CHZ basically. Where was it? Like I literally like shorted this 1308. Came all the way down here and I was like, no, I'm just gonna stay in this because I think it's gonna like
Make a
I
lower
took a
low,
view that this was
continues
gonna go
bearish
lower,
market structure. Yep.
right? And then it comes back up here and I'm like, you gotta be shitting me. And like when when it's like right here and you're like, this just looks like it's gonna run the high. And then sure enough goes back down. Like this really messed with my head. Like a lot of these altcoins have messed with my head. So I've taken less trades. I've like sized down. I've just tried to like maybe get a couple to get some confidence back. I mean, I think that's like something people don't talk about enough. Like you go through slumps, like it's about managing risk so you don't lose all your money, but like, and you can
Exactly.
keep trading, but like, dude, sometimes this shit just does not go your way. And so yeah, like you guys have been crushing it, and I'm like, man, like I should have closed here, right? But
Yep.
I didn't because
Hindsight's 2020.
I was trying to stay in a trade like longer than a day, because I took a view on the market. But yeah, it's also just like super illiquid. That's why these things happen.
Yeah, that's
Um,
actually a good point. The liquidity, and like we said, the market's still PVP. The liquidity for the market has, steadily decreased, and I think that's only going to get worse as summer rolls around. TradFi takes a summer off. You know that trip. You worked in TradFi, and everyone kind of just goes on a holiday vacation. So liquidity thins out, especially in crypto. And a lot of illiquid moves happen. And illiquid moves, when they happen, the thing to keep in mind is that basically they're all going to mean revert. So it's a mean reverting market. There's no straight trend. It's really just chop, crab, whatever verbiage you want to use. And either you're a low time frame trader taking your daily bread from the market, or you're sitting in trades and then literally have to like be cognizant that you're probably going to round trip your entry at least a few times, right? So like even shorting 30K, we went right back up and we retested 29.8 twice, right? So like you just have to be aware of those kind of things, and then either take a swing trader point of view or take a scalper point of view. And there's no right or wrong. It's really just about what you're comfortable with and how much, I guess, mental fortitude and mental exertion you want to kind of provide to the market, right? Because like this market will bleed you dry if you just sit here and stare at it and you're trying to catch every move. You're just not. So you got to kind of have to pick and choose your battles moving forward, at least for the next few months, I think, until Q3, Q4.
yeah, I mean, it can be as simple as like what CBS said. You just have percentage or dollar goal each day, and then like
Yep.
turn your screen off, right?
Yeah.
Or
Yep.
you can be swing trader in this market, which is is like non-existent.
There's
But
no good swing entry. That's the point to get across, right? Like everyone's going to get the same swing entry at some point. It's just, are you going to sit in it? Are you willing to pay funding fees? Are you willing to hold a viewpoint for a thesis that may take weeks to months to play out, right?
yeah, yeah, and so I mean, if you look at other tops, like distributive price action, just by nature, is like messy, and
Yep.
it's
And it's
designed.
slow to
Yeah, it's
bleed you
slow.
out, make you capitulate.
Right. I mean, look at the S&P. We just looked at that chart.
Yep.
Nasdaq's a little more clear. But like you look at other BTC tops, like it's designed to fake you out in all sorts of ways. So yeah, but I think that's an important part of the process is like decide how you want to execute and like what is the goal here as a trader. Like what's your approach?
Yep.
The scalping approach has been like really the best approach, I think.
Yeah. At least
In
for the
terms of
last
like
couple of weeks, 100%.
yeah, in and out, just around liquidity, it's been good. So I mean, you can see XO and SC just like shorting alts up and down and being like, I'm closing them now and then longing them. So yeah, it's trading both ways.
It's a good point you mentioned about, altcoins, right? So I think either way prices end up going, whether we go up or down. Bitcoin has been, held down as a kind of hot ball of money. Money has rotated out of it. And, we talked about meme coins, we talked about ETH pumping, etc. Bitcoin dominance, for whatever it is, it's a meme in my mind. But like point being is that regardless which way Bitcoin ends up going tomorrow, alts are going to take a hit regardless, right? They're either going to not, they're going to be slower to catch up with BTC, or if BTC nukes are going to take a devastating hit all around. So I think, for those of our viewers who might be investors in certain meme coins or shit coins or altcoins or the future of finance, whatever the case is, just keep in mind that if you've made any significant money in the first half of the year, that, you should probably look to at least de-risk or have invalidation where you say, okay, this is where I'm going to cut my wins, take my profits, get back out of the market and kind of sit on my hands. I think the toughest thing for a lot of traders is to kind of just be patient on the sidelines. And people don't really talk about enough, not having a position is a position. That's actually usually the best position to be in, because when you're not in a position, you're not biased, you can objectively look at the market and see what the market's telling you, not what you want it to tell you. And when you kind of get that type of positioning, it allows you to react rather than have a bias and say, oh, I anticipate, I'm long from 1840 and I think ETH's going to go to 1900 and it gets to 1880s like it is now or whatever it was. And then all of a sudden, your bias starts clouding your judgment. But, just another $10, then I'll take profit. But a trader who might be freshly looking at a chart sees, okay, 1870, it got rejected here, got rejected there, and they have a different bias. So point being is try to be as objective as possible in these markets, because that's the only way you're going to have good opportunities, right? There's always a trade to be had, right? This market has been plenty volatile lately, but just because there's a trade to be had doesn't mean it's a high risk reward opportunity, or the cost of capital is actually worth committing capital to. So I think that's the main point to get across right there.
Yeah, he says these men are trying to talk you out of your lotto tickets to Valhalla. This is a test.
John, these men are
John.
trying to talk you out of your lotto tickets. Yeah, and you put it so simply and purely. This is a test. This is an IQ test. I reckon that most of our viewers, myself included, I try to be as left curve as possible, because if I think too much, I end up in the middle, and you never want to be in the middle. But if you were, early to meme coins, you've made money, great. If you're just getting into meme coins and you're seeing it go up multiples, great, but be very quick to take profits, because it really is just a game of hot potato musical chairs. The music's going to stop, right? This is what you see at the end of cycles. Money rotates into the most ridiculous shit. And that's great. People make a lot of money at the end. That's where everyone's very happy. And that's when kind of euphoria starts to set in. This is going, all we need is Bitcoin to go to 35K, and my meme coins are going to do another 10X from here. And that's usually fatally flawed thinking, right? So if you've made good money, this is an IQ test, but it's also a test on how you manage risk. And, can you convert those pretty little numbers, P&L numbers that you see on the screen, and convert it into, real goods and services, real use cases? I always say, if you've made life-changing money in this first half of the year, change your fucking life. It's that simple.
Yeah. It's going into NFTs, man. I already saw some Pepe guy sweep a bunch of pandas.
He did, right? Like 60 pandas this morning or something?
It was like $120,000 of pandas the guy swept.
Yeah. So yeah, let's talk about, I guess, the summer rotation, right? Obviously, we have our meme coins right now. The money has rotated out of BTC, out of ETH, out of majors to now the meme coins. Where is the next rotation? Is it back into BTC and then just liquidity dries up? Or do we see a rotation trade trip where it kind of goes into like the further out on the risk curve, such as NFTs, right? I think NFTs have been in a bear market for a good amount of time. So I'm curious to have your take on what you think kind of the next rotation is, and where is that rotation potentially?
Yeah, I honestly don't know where the rotation is. I think people are just talking about where the next rotation is. There maybe doesn't have to be one. I think what Blur is doing on the NFT front with basically like leverage trading these things and adding collections to it is really shaking up the market. I mean, the Milady's floor is almost like 4 ETH or something like that. I think it was like 2.7 2 days ago before they announced it. Like a lot of NFTs got absolutely hammered too. So now you're kind of seeing them come back a little bit floor price wise around the Blur stuff. So maybe that's where the money goes. I don't know. I'm still very bullish on NFTs. I don't know when it's going to happen, but I do know that is like a really clear case for adoption with people outside of crypto versus any of these other protocols that people are trying to promote, or meme coins. Meme coins comes like from normies when the Fed pivots and liquidity is flushed back into the system. Like that's when you get a bull market, right? So
yes.
What we have right now is
we're at an inflection point, right?
Yeah.
It's either we're about to go on the most heinous bull run we've ever seen, and we're going to all-time highs, or we're really starting, that downtrend of a correction.
Like, you don't even need to call it an echo bubble, right? If it is a mean reversion trade, just pull the fib on the whole move, 69K to 15 or whatever it is.
Yep.
It's like 40 something, right? So
42, 44s.
Can you go to 25 too? Hold that and then go to 40? Yeah, there's no reason you can't. But like you have to have these kind of like open mindsets, right? Like there's a lot of people who are very bearish the dollar, right? So if that thing falls off a cliff, then risk is going to go up and crypto inevitably is going to go up with that, right? So yeah, we are at a pivotal point in the market right now, to see kind of where uh, where people are going to allocate capital relative to what the dollar's doing. Really,
Yeah, it's a good
um,
point. You mentioned the dollar. Can you bring up a chart? I'd love to kind of get your take because you are our resident macro guy when it comes to DXY and other similar indices. Druckenmiller, right? He said he's short the dollar. Is he short from right here? Is he, building a position, waiting for it to squeeze a little higher on FOMC? Who knows? But it's an interesting spot the dollar's been in because, like you said, when the dollar goes down, risk goes on, and we've seen assets kind of go up from there. Leading into FOMC tomorrow, we've kind of put in a higher low. SFP, the previous low. Yeah, where do we go from here, Trip?
so like this has been the talk of the town for like a long time, right? And the reality is like, what has it actually done? Like for 20 days, let's call it this. Like this
Yep.
is where we traded like 101 to, I don't know, 102. Yes, you have some like little moves above it, but like it hasn't done much, right? And it's pretty much like, uh, I guess you could say that's a lower low here. I mean, it's like a bearish market structure essentially
Yep.
in a
Yeah.
down zone, right? So whatever comes tomorrow, like I don't know, you have to get above like this
103.
zone really for it to be considered like, okay, this is like a pivotal point, and we're starting to like flip this and probably go up to here. Yeah, it can happen,
Yep.
but like this can also go down to 99, right? If that happens, then everything's going to trade up. It's denominated in the dollar, right? So yeah, I personally don't think that this is going to make a big move to the upside, but
This
we'll
will all
see.
be based on tomorrow.
Yeah, pretty much. Let's see that. I haven't looked at like a weekly chart of it. It is really. I mean, this is support, right? Like support is the scariest to buy or step in, like when it's like this close, right? We've seen it with Bitcoin. I mean, you have your Stoke trying to turn up here. Like, is this indicative of anything? Like, can it bounce here? I guess it could bounce like up to here. And maybe that's how you get Bitcoin to go to 25.2. But then like it could easily make a lower high and continue the downtrend, and maybe that's where you buy it. Like I don't have the answer, right? That's the most
Yep.
important thing
Exactly.
people need to understand. Is just like these are things that I'm watching for, and I mean you're into a pivot right here. We'll see. I mean Stan's not a dumb guy, right?
Of
He's
course.
short the dollar probably because he's just anticipating like the Fed is going to eventually do something, and so
Yep.
uh, whether
So,
that's
Trip, some Grant Stevens is asking if we head into a recession, what will happen to the dollar? Can we look into the past? What's your take on that?
oh boy. Um, well, let's go look at the past. Where's my chart here? What was our last recession? 2000.
Oh, wait.
Yeah, let's go like 08. Wow, it's so funny looking at like a currency pair versus like a shitcoin. So
Same
much,
thing, right?
yeah, there's just like so much history relative to that. When was, I mean, 2008?
Yep.
So
Bottomed, basically, right? Just by
the
the looks of it.
dollar July to here ripped. But like, was it the early? Nah. When was the GFC bait? Like, when did it start exactly?
I think December of '07, if I'm not mistaken.
Okay, so it fell off a cliff, and then it bottomed, but it took a while to bottom. I wonder if you could chart the S&P against this too. Let's see, how long did it stay down there? Uh, 140 days.
So, what, 3, 4 months, 4 months, 5 months?
Yeah. So you before it actually like so. Okay, so you basically
That's
traded up and
interesting.
came down. You traded a range, right? And then it broke out for 140 days. So like we haven't even really developed a range over here,
I
right?
mean, yeah, you could say that's almost been how long has that been like from there, from that low
From
to that
here to
high?
here.
Yep.
Let's look at that. Um, oh, 120 days.
Interesting. Yeah.
So I mean, it's not gonna be 140 exactly, but like, all right, we're
Consolidation before expansion.
end of May. It's kind of an interesting thing to look at. Um,
Good
if
question, Grant.
Yeah, thanks, Grant. If we just actually take this low and this high, like I'm curious to see where we stack up from the retracement, like where it's come
It's
into.
mean, I'm pretty sure, because it was at daily key June, if I'm not mistaken,
So
or a monthly key June.
it's gone to like the 50% fib.
Yep. Yeah.
Yeah. So your 61.8 is here. Can it make another leg down? I mean, look, like it's hard to argue that like this is like an SR flip essentially, like support, right? So it's like a 50-50 for me on this thing, but it's going to be like the biggest factor in the way we all trade long or short risk assets, I think. So
Yep. Agreed. Yeah, it'll be interesting to kind of see what tomorrow brings. Um, as it pertains to altcoins, etc., I really think just being patient. If we're going to get a face ripping rally, dollar is going to go risk off, alt to the moon, Bitcoin to the moon. I think you're going to have time to kind of react to that versus just anticipating. So, being necessarily flat or unbiased going into this event's probably the best take. But yeah, man, I think it's going to be I think tomorrow is going to set the tone for the entire summer. I think I can go out on a limb and say that, at least for the quarter, probably until Q4. So it'll be interesting to see kind of what develops. But I always fade the first move and then wait for things to actually start trending in one direction. It's usually just a bunch of, volatility, mean reversion, and then price will actually start trending in the direction.
yeah, so I think also if you just like, I think Chase, what's his name? Crypto Chase, maybe. Do you know him? He's
Yep.
got like
Yeah.
green
Chase
thing.
is good. Yeah.
Yeah, he actually put out a video uh, talking about like FOMC trading, essentially. So, and he had all sorts of examples. He had two examples, and it was like slow hip hop or something. And he was like,
Yeah.
"Here's the stop. Here's the stop." He's like, "Whichever way goes first, fade it." So if they run this, like if they run these up here, like, and that gives you your man. I just
Moved
think
into the pivot.
I think this is a huge liquidity pocket. Like if this does this and trades back inside here, then that's your stop run on your range high, basically, and you don't get this. If they do it down here into the what's going to give you your 26.9, call it
Yep.
that,
Yep.
into the
Your
pocket.
SFP.
So there's like this his strategy, like or his just like simple like idea is like this has worked the last two times. So whichever way they run it, you identify
Just
your
fade it.
stops.
Just fade it.
Yeah, fade it. So
I think there's only been one time that we've had like an FOMC or something similar, or maybe it was CPI where like the move continued in that direction. But I
yeah,
can't remember any FOMC where price didn't just revert right back.
yeah. You're always getting whipped off at some point and during the day. So yeah. Do we want to look at some altcoins if people have questions, or we can do
Feel
that?
free to drop any alts, guys, or we can wrap up with some, I guess, last minute advice, just trading wise, going into the rest of the week, kind of preparing for the summer. Um, what's your overall take, Trip, when it comes to just kind of how you're going to approach this market for the summer? Are you going to just chill? Are you going to focus on scalps? What's the play?
Oh man, I hope I'm doing a lot of tuna fishing. But I think like you can trade it. You just have to understand that it's probably going to be a low liquidity environment, predatory tape, which I actually sometimes prefer when trading around the liquidation levels.
Yep.
So maybe I can find one alt and just run it up and down, or it's just going to be like a mega downtrend if we start really breaking down market structure wise. I think you got to pay attention to all the market structure. I mean, like alts, there's a lot of alts that are bearish market structure. Like,
100%.
so
They've had huge moves from the yearly open too that have, some retesting to do eventually.
right. So if you want the simple strategy, identify red deltas, wait for them to turn green into your TA analysis, whether it's Fibonacci or support and resistance zones, and short them because they're just eventually. It looks like they're just going to continue to bleed out.
Yep.
Until market structure changes. Yeah, I'm kind of like toss up on like it is easy to say that people go on vacation and they don't do anything in the summer. It's kind of like the end of the year, like people don't do anything in the year, but like I've seen crazy price action the last year around those times when everyone was supposed to be at the beach or something.
Yep. And that's when you had the most volatility because everyone was
Yeah,
vacationing.
so a lot of the stuff that's been normal in the past has not been normal
Moving forward.
recently, just because we're in such a interesting time, like geopolitically, markets wise, um, inflation, interest rates. Like I talk to a lot of hedge fund guys because my friend is a trader. A couple of my friends are PMs, and they're just like, this is impossible to figure out. Like it's just like a really hard market to trade. So I don't think you're alone if you're confused in this market, but the more you can simplify it into a strategy that's like what I just kind of talked about,
Yep.
um, and just stick to your guns on that, stay disciplined. That's my approach right now. So like my approach for tomorrow is probably pay close attention to BTC because you're going to get a large move in BTC most likely,
Yep.
and so it's the most liquid. The altcoins are going to be just like a roller coaster tomorrow. I mean, Godspeed if you're going to try to trade any of those things.
Agreed.
Because the wicks up and down on those things, like it can
The
be
volatility is going to be wild. It's going to be, multi-percent moves. Your 50 X's are not safe. Your 25 X's are not safe.
no,
None of that stuff is, it would behoove you to kind of position and give yourself a nice cushion for managing your risk because, you can get what you think is a great entry, up or down, whichever way you fade it, just for price to continue going against you another, 2, 3, 4, 5%, and you're just eating that drawdown without a plan. So if you do plan on trading alts tomorrow, just have a plan in place. Be prepared for some whipsaw and just, keep your risk small until you see the direction of the trend and then you can compound in that direction.
all right. So someone wanted to look at FTM. It looked like
Phantom.
maybe pull up the chart on that, and then I'll look at the liquidity. All right. So it looks exactly like every other alt chart. See, I just think that this stuff's all going to get cleaned up. Like,
Oh, you're on
this,
Bitcoin still, by the way.
oh my bad. Hold on a second. Here. So here's FTM. So I don't really know how much, like, what the historicals are, like in terms of like the extremes on the delta. I think you've traded this before. I would imagine it's more than 57 million though in shorts.
Yeah, it gets to 200. Some of your favorite alts usually gets around 200 before there's like an actual,
Yeah.
guaranteed reversion.
So you can squeeze another 28 million in shorts. Um, Maybe you take all these stops here and it comes into here. I don't. Do you have a chart up? I mean, like
Yeah.
these are magnets right here, right? Um, but I would say that like these guys look pretty vulnerable right now. Again, it's like
4 hour key June 4250. I think that lines up with liquidity.
yeah, right here, 42.50.
Yeah, I could see
So
that. But again,
um,
this is really just so I guess where's your yeah, okay. So let's do a little thought example here. Um weekly open, Monday high, 42.26 to 42.66. And how does that look with liquidity trip?
so 42.54 is a 35x short lick. So I mean, you could try to short this and put a stop above these highs, but like there's no reason it can't push like up here too. Um,
Yeah. I think the safer, I mean, it's not as pretty risk reward wise, but over the highs, right? So for example, if you're going to do, here's your weekly open, here's your Monday high. And then if you get somewhere around here and you can put like temporarily a stop loss above here. And then once you see the rejection, you say, okay, it comes up to here, starts breaking down around here. Maybe you start compounding and then you set your hard stop above whatever high it ends up putting in. But you can't really go into these blinds saying like, okay, I'm going to short this area, put a stop here. And then what are you playing for? Like a 1-to-1 risk reward? Not as attractive. So that's why I think being patient, sidelined, and ready to react makes the most sense going into tomorrow for something like Phantom. But I think for a lot of these things, actually, I'm going to just assume if we go through some of these charts, the weekly open and the Monday high are probably untapped on a majority of these alts. So those are the areas you're probably going to look for to gauge your reaction to see if it's worth shorting or not. For example, if we looked at, let's just say Phantom BTC pair, okay, it looks like trash, cool. So I'm assuming if Bitcoin goes up tomorrow, Phantom's going to be weaker. So maybe that Monday high weekly open area is actually going to be a good short because, Phantom BTC is going to be breaking down to the downside. So albeit being weaker, it's probably a better short than BTC itself. I think that's going to be the case for a lot of alts moving forward this week or tomorrow.
Yeah, I don't know if we have STX, but I saw someone mention STX today. I think you did, Doran. I also saw it in another chat.
Yeah, I saw the perps were way below spot, and that's like a short squeeze waiting to happen, essentially.
There's no liquidity profiles on STX, unfortunately. I don't think there's any on Render, which is another.
No, I looked at Render.
Link?
Yeah, we can do Link.
I was just going through the list. I saw Link.
And then we can look at OP. OP is one that I actually was looking at earlier.
All right, we'll look at Link. I never trade this coin. Maybe it's time. Anything exciting? Okay.
Chart-wise, it's a little strong, actually, but there's still a green delta, right?
33 million in longs. I mean, here's the thing, though. Like, high, low, higher high, higher low.
It broke bearish market structure, so
higher high.
Why are you calling top
low.
on that?
So can it come up here and make a high? 760? Is that like an interesting level on the chart?
So let's take a peek here. 7.6. So 730 to 785. So weekly open is 728, and then Monday high is 785. But there's a pivot at 754. So yeah, this is that zone. But again, dude, how large is this range, right? This is like almost a 1% range. It's very tough to just blindly leave asks in this area and have some sort of risk management in place where you can have a clear invalidation without putting your stop like 3% higher for a move back down to sweep these lows, probably another 3%.
Well, what about 750?
Yeah, I mean that's the midpoint of weekly open and Monday high, so I can see that.
That's 705.
750.
So you'd run this high basically, and you'd come into this zone up here. You're like so this.
Okay, yeah, that makes more sense. Yes.
And that's like basically your SSR zone on BTC at 29.2. If you go look at that chart, like the breakdown.
Why do I think that chart is just not updated for some reason?
Your link chart?
No, your link chart.
What do you mean?
Because it's showing it's at 7.4, but price is 6.79.
Yeah, I was gonna say that doesn't seem right.
It's like, hold on.
All right, Hyblock, got to get that one fixed.
I think the Binance feed on a lot of these crapped out recently.
Maybe I wonder if you dropped the granularity. Okay, so I didn't look at Link at all. All right, so they need to update this one. So ignore that
commentary. Weekly open, weekly Monday high is probably your best bet on Link. But like I said, I think that's going to pertain to most of these charts because again, we had a strong move down off the weekly open on the Monday high. This is an untapped area of liquidity. Again, I'd be waiting to see the reaction here first, wait for some sort of high to be put in. And then once I see the high, I know where I can define my risk. And then I can look to enter here on a breakdown back below the weekly open. That's kind of how I would look to play a lot of these alts. Do a couple more, though.
All right, let's see. OP. Uh,
OP. Where's OP? There it is. Again, this has more. This looks like it's showing strength against Bitcoin, kind of similar to ETH. It's just been a rising channel up. Daily just looks in a range. Came off the range lows, range highs. This is like an interesting area, 260. What are you seeing on the lick side of things?
what's the price right now?
2161. Yeah, that one's updated.
Okay, so 216.5. There's still shorts in this thing. It's not like, I mean, they squeezed a bunch on this move. Like, look at this. Like this.
Yep.
Right. So your big targets are 218. If it like, but this is a big one right here. 2165.86. Is that? I mean,
2177 and 2167 is weekly open, Monday high.
167. That would
167. Yep, that's your weekly open.
That would take this lick. You'd run the weekly open right here.
Okay, so there you go. But again, I'm sure if we throw on OP BTC.
But these things cascade like up pretty quickly too.
That's what I'm saying. So if you look at OP BTC, this is bullish market structure.
So you go to 220.
Yeah, I wouldn't be fading this structure right here. This looks like it can go much higher, maybe for an SR flip up here. So you always want to take a look at the alt BTC pair you're planning on, shorting or longing to see if it's going to be relatively strong against Bitcoin or not. And that should inform your, trading decisions. So based on this alone, I probably wouldn't be looking to short OP until I maybe had moved back down here, or maybe SFPD's highs and came back down. Otherwise, it looks a little strong for my taste.
And just wait for the delta to flip too. I mean,
Yep.
look at, and yeah, it can like sit here, but I don't know. Try to maybe identify some of the spikes. It's kind of hard though sometimes with these things because like they move fast. They're illiquid and they can just rip up, and you have to kind of like step in when you see the weakness. It's really difficult to short it on the way up.
To catch the knife.
Yeah. QNT, or I don't know if QNT is.
I don't think QNT is
on that. Oh, someone wanted to look at Matic. That's fine.
Right,
I bet this has.
See, this one's looking strong against Bitcoin again.
Yeah, and it's got 55 million in shorts.
Yeah.
I think like people had 94 as like the range low too, right?
Yep.
SC did. I mean, look at a lot of these charts, right? It's like
a lot of these charts almost make me feel like the scalp long from here is actually might be the better move in this case, at least going into FOMC if we think that, Bitcoin's going to trend up into this move. And then, your take profit targets are going to be weekly open, Monday high, because on a lot of these things, they haven't been touched.
99 on Matic?
98.83. That's your Monday high. So,
Yeah, there's a lick at 99.85.
Right around there.
Yeah.
I almost like this for a long, to be honest, with a tight stop.
I mean, look, the liquidity that has to be sourced nearest is 96.5. So like this right here looks like what Bitcoin looked like the other day on the weekend.
Yep.
I was like, in our chat, I was like, nah, this is looking pretty bullish and it's about to run like all sorts of stops. Because this is the type of move where it just goes boom, straight up. And Bitcoin's what, 28,724 now? I don't know. ETH's 1876. Maybe you do get a move up.
Yeah, I still think 29. You're gonna sweep that again. I think with a lot of these alts, especially Bitcoin and ETH, the Monday weekly open and the Monday high are gonna get tested before we get a move, and they might even get tested before FOMC. I think that actually puts things into a better perspective if you are looking for shorts, because then you get to gauge the reaction from those levels and see if maybe they start breaking down before FOMC and maybe get a wick back up into them and then reject again. So I think going into tomorrow, mark out your weekly open, mark out your Monday high on your favorite alt and BTC, and just gauge the reaction, right? How do you know if it's being rejected? How do you know if it's being reclaimed? Well, clearly if it's a rejection, I always say you want to see follow through. So what does that mean? If we reject from 29.3, then you want to see a break in bullish market structure with lower lows and lower highs. Maybe you wait for the first lower low. Maybe you wait for the first lower low and lower high, followed by another lower low as confirmation. Whatever the case may be, you just really want to set your parameters for actually executing on trades. And then when you see that happen, whatever it is you were looking for, execute then. I think that's pretty much the summation of this stream today. Just kind of mark out your levels, be prepared to go to battle, execute when you see what you want to see, and then manage your risk.
Holy cow, dude! Look at Ape.
What's it at?
I mean, it's just like putting in this bottom range here and a lot of shorts.
Oh, it's gonna squeeze. Yeah.
Yeah.
No, you stop sharing.
Oh, that's because it hold on a second. The Hyblock thing is like where is it? Still an amateur streamer, guys. All right. Yeah, this is Ape. I guess maybe grab these and then go up. I don't know. This one's been pretty interesting. Like I remember when we were shorting this and the monthly open was like 420.
Yep.
418.
I was aggressively shorting this one, just get market selling.
Yeah, because it was breaking down, and then like sure enough, it like came back up, and yeah, that was a tricky one. Were there any others, or are we good?
I think we're good. I think we basically mapped everything out for everyone. Weekly open, Monday high, prepare, execute, and then manage your risk. That's really all there is to it. Any closing thoughts going into FOMC trip before we head out?
There are a lot of red deltas out there, guys. I think that you could see some unnecessary squeezes like prior to the actual interest rate announcement. Not the first time we've seen it.
No,
like,
especially last time we moved up to 28.8, 28.9 before we were in that March range before FOMC.
Yeah. So, ARB. I'll look at ARB quickly because I actually was looking at this the other day, and there was a lot of shorts in that because I longed actually 129, closed it at like 130, 150 though. Nervous trader. Yeah, but still, like you can clean a lot of these guys out still. Like this, wow. I mean, think about if you think price is going up, then this is going to
probably going to rip, right?
Rip everyone who's short here. Look, it all looks the same.
Oh wow, that actually looks nice.
This all looks the same.
No, but I think from like an upside perspective here, let me show this. So weekly open $1.37 almost. Weekly Monday high $1.39. That from here, that's like a 1%, almost 3% move. A lot of these alts, again, like we talked about, Bitcoin not putting in the top in here and probably going for 29s or higher. If you conform to that thesis, then there's probably good scalp longs on alts to be had, and ARB actually looked probably like one of the more decent ones just from a risk reward perspective.
Where would you put your stop?
Probably below this low. I wouldn't want to see this bullish market structure violated. Otherwise, it's probably going to chop around more.
I mean, look, it's like SR flipping. If you look at the other side, like if it flips that
here,
area, yeah. So then what you're getting?
I like this trade actually. May have to takey.
Yeah, ARB. It's still a good one. It's still like one of the newer coins that the liquidity there obviously more than some of the other alts because there's more interest in it. But yeah, no, this is fun. I hope you guys found that useful, or just how we look at markets and liquidity. Tomorrow should be exciting.
Yep. So once again, guys, prepare your battle stations, map out your levels, and then when you see what you want to see, execute. That simple. And of course, manage your risk. So with that said, guys, thanks for tuning in, and we'll catch you guys next week.
Take care, guys.